Dr. Michael Busler, a public policy analyst and a professor of finance at Stockton University. Thanks for joining us.
Hi, Veronica. Thanks for having me. As you know, it's always my pleasure to be here.
The Federal Reserve cut rates by another quarter point. What economic information did they factor into that decision?
Well, unfortunately, because the government was shut down, they don't have a lot of very current information. However, what they do have is that the job market is weakening, and they're responsible to keep a full employment economy. The latest numbers on inflation show that the inflation rate is about what it was when President Trump entered office. Now, it did go down, and it's come back up again. But I think some of the next data that comes out in January will show that the inflation rate is indeed falling, and will, in my view, will likely to continue to fall throughout 2026.
Now, looking at that further, can you break down the impact this will have on everyday Americans?
So the lower lower interest rates are certainly positive news for Americans. It should result in lower interest rates on all big ticket items like cars and houses, so that's good. When the inflation rate comes down further, and I believe it will, I think by the end of this year, I think inflation will be down to the Fed's target of about 2%. Now, why do I say that? Energy accounts for about 7% of the consumer price index directly, and another 20% or so indirectly, because it affects the cost to manufacture goods and services. Energy prices are falling. Oil is now under $59 a barrel, at least it was yesterday when I looked. Gasoline prices are dropping. The national average is under $3 a gallon. I bought gas yesterday and I paid $2.89 a gallon in southern New Jersey here. So gasoline prices are falling, energy prices are falling, and that will bring the entire inflation rate down next year. That's positive news for consumers, especially since wages are increasing much faster, or they will be much faster than the inflation rate, which means they get a real increase in income, and that leads to the ability to buy more goods and services and a higher standard of living. I'm very optimistic about the economy going into 2026.
Now, with that optimism, the Federal Reserve signaled some reluctance for further easing next year. What criteria will they be tracking to make those decisions?
Well, they look at two things, both the unemployment rate and the inflation rate. And again, we haven't had much data because the Federal Reserve, the federal government rather, was shut down. But I think they'll start seeing in January and February, they'll start to see the inflation rate coming down. If they stimulate the economy through their interest rate cuts, the unemployment rate should go down. Now, there is one caveat here. I believe economic growth, which again, we don't have any data, but I believe in the third quarter, the economy probably grew at about a 3.5% rate. The fourth quarter would have grown about a 4% rate, but with the government shutdown, that may be reduced a little bit. But still, the economy is growing and should be providing jobs, and it will. However, there will be some job reduction due to artificial intelligence coming in and simply doing away with a lot of jobs. So the unemployment rate won't fall quite as quickly as we'd like, but still I think the trend for unemployment next year, the trend will be down.
Dr. Michael Busler, thank you so much.
Always my pleasure.